Oh, Canada.
Yeah, I love it.
That's more than enough for us. Okay, so that's our new guest, Carlito.
Manny.
We got another podcast going on here.
But not only that, guess where we are?
We were at Skylux Studios,
And
Skylux Roofing.
Thank you again, Mark, for having us in your studio and
Thank you so
supporting
much.
the construction life and the industry.
Give them a call. You guys need some roofing, some cladding, some everything.
Well, it's not just roofing; it's flat roofing, it's
Everything.
shingle
It's
roofing,
all kinds
it's
of stuff.
siding, it's
Great.
downspouts.
Perfect. We do have a very special guest here today. We have Matthew Jasenko from MRJ Financial Solutions. So you can already guess that we're going to be talking all plumbing. No, we are talking numbers.
Wait, can I
right?
say it? Money.
Money. So since we're talking numbers, I actually wanted to just talk a little bit about Canadian numbers. Sorry to all the American listeners, but I just want to let everybody know that basically you got a lot of Canadians here that are retiring not mortgage free, and they're carrying debt to about $11,200 on average each person.
Wow.
So you're retiring, don't have a job, and you got that, right? So you just, people are not setting up right. So they're not saving. Some percentage of the market is saving $184,000 for the retirement, and that's 19% of it. But 30% of it is saving less than $50,000.
Wow. Yeah, that's not too
That's
much.
scary, right? So
That's
we're talking
really scary.
It's tremendously scary, right? So 43% of women at age 55, but they still don't have a retirement plan in place, compared to 27% of men.
Can I just add something?
Go ahead.
I was speaking to someone at the job site today, and he had said to me, unfortunately, his grandmother passed, and he was telling me that she was in a senior's home being taken care of, and her bill costs of living there were $4,600 without buying anything extra. So you could just imagine how important it is, numbers and
Yeah,
to save
yeah. No,
and
that's-
invest properly.
Yeah, that's inexpensive actually compared to what's out there.
Yeah.
You know.
Oh, yeah, what's going on? I just want to share a few numbers here. So 26% are still making car payments when they retire. 7% have unpaid health expenses. 7% owe money to holiday expenses and vacation expenses. 6% still haven't paid off their home rentals at retirement. So these are just scary numbers. And funny enough, this is from 2012.
Wow.
So I can't think that it's gotten better. I think it's gotten worse. But so Matthew, you are here to talk to us about a lot of stuff. It's over to you now, man. You take it on and just speak to our listeners and tell us what we got to talk about when it comes to income tax and tax. And I guess one of the big things I want to find out from you is cash jobs. Because we get a lot of guys who are asking about cash jobs.
Yes.
We think it's evil, but we want to know what level of evil is it?
Well, thank you very much, Manny, there. Cash jobs, everybody does it. Hey, it's a given, especially in construction industry there. But the thing is, when you do the cash jobs, you have to keep your income consistent from year to year. Now, if let's say you made $500,000 one year and you made $100,000 the next year, well, that's just a red flag for the taxman come and audit you. And all your suppliers too. When you do your cash jobs there, that's okay. Report whatever you want to, but just make sure it's consistent or within the ballpark of, say, rule of thumb is $20,000 to $30,000 within a few years, because everything fluctuates from year to year. You can't have the same income from year to year, so it's guaranteed to fluctuate.
So you're saying that you don't mind contractors doing cash jobs?
I don't mind at all. It's a fact of life. Everybody does it.
Well, are they really saving by doing the cash jobs, or are they saving? Or isn't there a threat later on regarding our IRA, and all of a sudden something's going to happen, and then they find a discrepancy? How do you explain all that stuff?
You mean CRA?
Sorry, IRA.
Buddy,
Sorry,
where are you?
CRA.
You just stumped me there. I was like, IRA.
IRA, Irish
No,
Republican
not the
Army.
IRA.
Yeah, I don't know why I was there. Maybe St. Patty's Day already did this week. Okay, yeah, but so I've never done a cash job personally. I know a lot of guys do cash jobs. I just can't, my bookkeeper, my accountant freaks out at me when I actually tell them that a client wants to do a cash job. So I didn't want to do it, and I don't do it because the concern is, how do you hide that, I guess? And I don't know if we want to teach people here how to hide that.
Well, we should talk about it openly. I mean, this is a conversation about information anyways. If it's right or wrong, it's something we need to cover. One thing that we do need to talk about is when you do a cash job, a homeowner automatically does not have
Warranty.
Well, they don't have a warranty, but something worse can happen. I know people that have fallen off roofs, fall on the ground, and they're crippled, and they sue the homeowner. And the homeowner hired someone to save a little bit of money, and it cost them millions. So many headaches and divorces, their home, and so many other things that are involved. Another thing is, if you're not insured and you don't have WSIB, when your guys get hurt or you hit a gas line, homeowners are stuck on it. So I just wanted to cover that.
Yeah, for
Talk
sure.
about cash.
Everybody does it. I don't have a problem with people doing cash there, as long as it's consistent from one year to the next. Okay.
You don't want to jump all of a sudden 100,000 one year to the next year.
No, you don't. No, you want to keep it within a reasonable range of, let's say my rule of thumb is $20,000 to $30,000. Maybe stretch it to $40,000 if you have to there, but just keep it within a range from one year to the next. So you do fluctuate a little bit there, but what's in an acceptable limit there. When you just get too extreme there, then that's just screams, audit me, please
Yes.
audit me.
Yes.
You don't want to do that.
Another thing about cash, are you saying that it's okay to get cash but claim it? Or are you saying it's okay to make cash and not claim it and still be in that fine line?
Well, you can take cash as long as you claim it.
Okay.
However much you claim is totally up to the contractor and whatever their tax bracket is for that particular year there. My policy is claim it, but you can always have an extra expense or two come along that just somehow come out. Maybe you had rent some equipment there that you didn't have to rent before, but now you had to because of a certain job there. That's okay too.
You're claiming it to the government, and they're perfectly fine with that, with you claiming cash portions of your income?
Well, they can't prove otherwise. So they're relying on the individual to report all income.
So the money's coming in, you're taking the cash and you're putting it into the bank, and then you're claiming it as an expense or something in your business.
Yes,
As long as you keep it into the $20,000 or $30,000 bracket, you don't fluctuate too much year to year.
that's right. Yeah.
The government won't really raise a red flag and come after you.
Not really, not for income tax. So the HST is sort of a different matter
That's a
altogether
different story.
Yeah, HST, they're really strict. Again, keep your numbers consistent as much as you can. You don't want to take off claim a huge refund if you can help it there, because then they start asking for receipts. And when they start asking for receipts, you have to have a certain timeline, usually about 30 days to come up with receipts there. And they want you to tally the receipts and send them in. And then they look over them all and say, this looks reasonable, this doesn't look reasonable. This doesn't look reasonable at all, and they might deny your tax credits.
Well, it's funny you say that. 2 years ago, I have two vehicles. I actually had three. I just got rid of one. And in those two vehicles, they're both work vehicles. So one hauls my dump trailer and my garbage and like anything that I need for large materials that during the summer or something that wouldn't fit in my van. And then I have my van. So what I'm leading to is my accountant, I give him my receipts
Yes.
for my fuel. I give him my mileage.
Yes.
And, I go on with my day. And then, a year or two later, CRA calls me back and says, or HST calls me back and says, well, we're not accepting these receipts. And I'm like, why? I gave you my receipts. And they're like, well, it doesn't look realistic that you actually use that fuel, even though the kilometers are there and it shows it. So we're not going to accept it. And then,
Yes.
And then they send penalties, and
Yes,
those
that's
could
right.
be like
Yes.
5 to 10,000. So what do you do in a situation like that?
Well, don't forget, everything's subject to appeal. So you can always appeal that on the basis that, well, I have two work vehicles. This is what I use them for. I use one for my dump trailer, like you mentioned there, and I use another vehicle for strictly doing
Tools.
running around and getting
Yeah.
small materials from Home Depot or Lowe's there. If one happens to be like a cube van, and you can say, okay, take a picture of it and say, this is my cube van, and it just hauls all the big materials that can't fit in my, whatever vehicle you have, your Ford F-150 there,
Honda Civic.
Honda Civic, for sure.
That was the joke. That's beginners.
Yeah.
So what I'm leading to is I actually ended up paying a penalty. I got charged with 5 accounts. Like I had to go to court for 5 different parts of that bill. And I ended up having to pay for something that was true and real, and they
Yes.
did not accept it. So what are the numbers that we can get away with? Can we talk about what can you write off? How much percentage of each one? Like how much of your car can you write off? How much of your lease can you write off? And so on. Like, what
Well,
are
I
the
want to
things
get
you
into
can write
that,
off?
but Matthew, if you can get into, is cash really worth it for us as contractors? Is it really worth in the long run, or is it just a necessary evil of the business?
Well, it's a cost of doing business. That's what it is. Okay, everybody does it. They're not going to totally stamp out cash jobs there, Everybody's going to do a cash job here or there. It's just a matter of claiming as much as you can that's going to be consistent with what you have from one year to the next.
Well, that's what
And
I've
it's very
learned.
very hard to track.
Yeah, that's
you know?
what I learned from my accountant, where I've been with him for a long, long time. He's just told me that do your books properly to the point where you don't want to raise any red flags, and then most of the time, CRA will stay away from you. They'll pay attention to you, but they won't really come after you. And the last thing you want to do is an audit. But like you said, he's also told me the same thing, that you can still get audited,
Yes.
and then you got to go through everything, and then it's their job to find something incorrect, and it's your job to prove everything correct.
Yes.
So it's a back and forth. You don't have to panic as a result of it. You just have to go through the procedure of doing it.
That's correct, yeah.
And then, like you said, yeah, you can appeal. So it's not like that's the final word from the government, and that's what they're after.
No. You can appeal what they say. Let's call it an administrative appeal. But if it's a question of law, then you have to go to the federal tax court and say, no, this is wrong interpretation, and that require a tax lawyer to do that. But that would cost thousands of dollars
Again,
to
yeah.
More
to fight
legal
that.
fee.
But something.
Well, hang on a sec before you go. So Matthew, what's your background? Like you're offering financial solutions. So MRJ, what do you guys do?
Okay, so we offer bookkeeping, tax preparation, QuickBooks training, and everything in between there from A to Z.
Perfect. All right, I just wanted to find out about that. Go ahead.
And getting back to what you were saying, and Manny will always try to do Manny always does 100% the right way. Then you don't have any headaches in the long run. But even more important about not taking cash is that when you're accepting checks and you're not fumbling around with cash and checks and not claiming, you don't get into a whole bunch of lies and you get lost in your bills and so on. You create credit, which establishes to get more credit.
That's
so
right,
that
yeah,
you can
yeah.
do bigger projects,
Yeah,
potentially
yeah.
get into other jobs. But it also really separates you from the guys that just do cash, because the guys that do cash aren't as serious as the guys that do. When you're claiming WSIB, you're claiming HST, you're
Yes,
claiming your
yeah.
taxes, and that's a lot harder to survive and be honest in this industry.
Oh, it is, But unfortunately, the bigger you go, as far as sales go, revenue goes, the more you're going to be on the radar screen. So once you hit the radar screen for the government there, then they want to know, okay, where's your HST number? Where's your business number? Where's your WSIB number? Where's your insurance for your guys there and all the other, everything else there? So when you get to that level on the radar screen, then you have to be honest. And that's why the big guys have to be really, they're really gung-ho on everything, all the paperwork there, because they're on the radar screen. They're being looked at every which way. And if they don't have it, the government could come in and literally shut them down overnight, and they can't afford that.
Of course.
They got a multi-million-dollar project. They can't afford to not have someone on site that doesn't have their WSIB or the clearance certificate there. Someone comes in, let's say, man, you come in, do you have this, and this? Oh, you don't have it? Well, sorry, we can't let you on the site here, because if we let you on site here and we get audited, that we're shut down. You can't afford that.
So I guess cash jobs are worth it in the beginning when you want to go on your own and get
Correct,
started,
yes.
and you need to start building a clientele.
That's right, yeah.
You just do it smart. That's all. But then
Do it
you're
smart,
eventually going to realize that you can't continue going that same route. You'll eventually, if you grow your business, you'll have to go the proper way of
You'll
doing it.
have no choice. You'll
Yeah.
have no choice, And when you do business with the government there, it's like dating naked. They will know everything about you all up front. I love it.
It's
Yeah.
true.
They're
It's true.
extremists. I love it.
No. It's true, right?
But talking about cash jobs and contractors beginning and why they have to use cash at the beginning of their career in construction, the really important is, when do we start claiming HST? What percentage or what amount of money do we... Like, I know that you don't have to claim HST to a certain percentage or a certain amount of money. What are those numbers and percentages?
Yeah, so you don't claim HST until you reach $30,000 in sales. Okay.
So you're not charging HST until you have produced.
Well, you almost reached 30, right?
Yeah, when you reach exactly $30,000, then that's when you have to register for an HST number. But you can register for an HST number even before that and get all your what they call input tax credits, or money that you spent to get that HST.
For people that starting, I wanted to mention this because
Sure.
it's a loophole for beginners or
Yes,
people starting,
yes.
or people that have been in business for 20 years and restarting a new name and
Yeah.
getting rid of a partner and so on. I guess it's really important that when you do have your HST, or if you don't, you get to 30,000, automatically your client needs to call you and say, I've reached $30,000.
Yes.
I have not claimed HST. Where do we go from here? So where do we go from here?
That's gross sales, right?
That's right. Gross
30,000
sales. That's right. Yeah.
Okay.
They don't care about net because net is whatever you pay at the end of the day. When you reach $30,000 gross, then that's when you have to register for HST. And it could just be as simple as going on the Canada Revenue Agency website and signing up for an HST number. And it'll take a few days, but they'll give you an HST number.
Yeah,
and
it's
then
really
you're
simple.
covered.
Yeah, the website's
Well,
simple. It's actually funny enough, easy enough to navigate, and you get the number no problem.
The number never changes for HST. It's always 13%.
Yes.
How much can you write off and what can you write off in your HST? Like say, if I buy $10,000 worth of drywall a year and there's $3,000 of HST, I can write off that HST completely.
Well, there would be $1,300 on that $10,000 worth of
But that's
drywall.
100% write off, right?
That's right. Yes, it is. Yeah.
Because that's an expense to your income.
But that's only if your customer or who you're subbing from pays you the HST. If you don't collect HST, then you don't put that on your invoice and you don't charge for it.
That's correct. Yeah, that's right. Or be included in your sales there. So whatever they paid you, it's assumed that HST would be included in that.
Okay, but hang on
price.
a sec, backtrack. So let's say for argument's sake, we've got a $10,000 job,
Okay.
cash.
Yes.
Now we've purchased $1,000 worth of drywall. We had to pay the $130 on it. We can claim the $130 of HST.
Yes.
You got what I'm saying?
Yeah, but it just doesn't seem right doing that.
Well,
because if you're not
If
claiming
the government's
income,
listening right now, it's not right.
yeah,
I mean, but I know what you're saying, Matthew. It's
Yeah.
it's technically not right, but you're small enough that the government won't. Okay, let's go pick on this person.
You're like a little mosquito.
Yeah,
but
Mosquito.
it'd be in your best interest that if you were that kind of person or you were trying to break into this industry and these are the steps you had to take for yourself and that was your decision,
Yes.
you shouldn't
Yes.
claim that HST if you're not paying that HST. That way you
No,
don't
no,
get
you-
on.
you
That way you
should-
don't get on the radar.
no, you won't get on the radar because you'll be clean about everything, right?
Is that a fact?
That's a fact. Yes.
Okay,
Yeah.
that's
Yeah,
good
for
to
sure.
know.
Any of these contractors starting out, they're going to register a business.
Yes.
They'll do that to get a master business license. And then when should they be considering getting into incorporating that brand, that business of theirs?
Construction is an industry where litigation is very frequent.
No, I've never heard that, Matthew. I have
know
no
where
idea
he's
what
going
you're
with
talking
this
about.
already. This is a great point.
Okay, go ahead.
So it makes sense from the get-go to incorporate yourself because that's a separate entity altogether. So when they sue you, Manny, you'll say, well, you can't sue me. You have to sue the corporation. So it's
Yes.
Manny Inc.
Yes.
And by the way, I don't have too many assets in the corporation, but you go ahead and sue anyway. So there's no point
You
to
won't
that.
get anything.
That's right. Exactly. Yeah.
Not unless you and people that are listening, contractors or homeowners, really need to be careful whenever you're purchasing a line of credit or a visa. Never sign personally, because even though it's under a corporation or a limited company,
Yes.
you are still 100% liable for it. And if you try to do bankruptcy or a proposal, you will not get away from it. You will have to do
No,
it
your line of credit should be a business line of credit.
It
Your
should be,
credit
yes.
card should be a business
But the
credit
most
card.
important part is that you never sign personally for that. Usually the banks don't release it.
No,
without
hang on a sec. So Matthew, so if you're incorporated, you're the signing officer, so you
That's
can
right.
still sign for things that are happening with that company, but they can't come after you personally.
No, they cannot. No.
Oh, is that a fact? So if I wanted to get a business visa
Yes.
and I didn't want to sign personally, you could sign for me? But wouldn't that make you liable for...
No. You're signing because you're the signing officer of the incorporation.
I know, but a lot of companies or banks will not release that kind of credit line unless you personally take the debt on, even though it's a business.
Well, that depends on the bank. Banks will always want to try and get you to personally guarantee it.
Well, you've got to attach some sort of equity to it, some sort of asset to it, right?
That's right.
To that line of credit.
But you're still a gamble there. So what I'm leading to is if you are a corporation or a limited company, it's just best to build your credit up with the money that you have in your bank instead of putting anything under your own personal name and signing
set
for
up
that
the two
company.
entities. Like
Yeah.
you got to separate the two entities. So that's the primary reason why. So I guess they should incorporate right from the get-go, right from the beginning.
Right from the get-go, it makes life so much easier.
It doesn't cost that much. You can go online now. There's other websites. There's like an owner. Like there's all kinds of sites that are connected to the government, and then you just pay. They do a name search if you want, or you can do a number, which
That's right,
is
yeah,
a lot easier.
yeah.
Out of what is like $600 or something.
You get up with $600 or as low as a few $100s if you do it yourself.
Yeah.
Yeah.
It's not really that hard.
And then you're incorporated, and now you're protected. So if you have come across a bad client, and they want to sue you, then go ahead, sue. But you can't really get anything out of me, right?
That's right. Yeah.
Personally speaking.
That's right.
Well, they can still take you to court personally. And
They can
try
do that.
To.
Yeah.
But I do want to, while we're at this point right now, I would like to separate the 3 levels.
Sure.
Personal proprietorship, a limited, and corporated. What are the differences between the 3, if you can explain that to the people?
Okay, so proprietorship is simply that you just open up your own shingle here. You're personally liable for everything that you buy. Every job that you do, you're personally liable for it. So any asset that you own, house, car, dog, cat, it's all on the table for litigation there. When you're limited, that means you are, as far as my understanding goes, you're a limited liability corporation there, so you have a limited scope. That's what you're doing. Corporation is simply that you're incorporated, you're an incorporated company here.
Well, yeah, I guess there's 3 levels of how they can attach you personally to it.
Yes.
At a sole proprietorship, then you're still connected to it, but a limited, you're not connected to it, or you are? We know incorporated,
You're
you're
half.
not.
It's not complete. There's loopholes that they can get you in still.
you're limited-
But corporation is completely disconnected.
That's a limited partnership. I've never done a limit where I've gone from sole proprietorship right to incorporation.
Yes.
And then that's it. So sole proprietorship, I was unprotected and they can come after me.
That's right, yeah.
Incorporated, I'm protected and they can't come after me, personally
Well,
speaking.
my company's limited and I am protected, and it will not come after me personally.
What are the drawbacks
There
then?
are loopholes, but that will cost you a little bit more with lawyers, but you can get out of them. I still paid the same as a corporation. When I got it like 20 years ago, when I think I paid $1,500 for my lawyer to limit my company.
Yes.
And I think the corporation was like $2,000. And at that point, he just said, don't worry about going corporate. You're not big enough to worry about that. Just go
Yes.
limited. It's the same thing basically, but you're a small guy. When you get to a certain point, we'll get you corporate.
That's
That's
right,
for
yeah. Yes.
big numbers where you don't want to get involved personally at a personal level at all.
But Matthew, you're saying to get incorporated for more the legal aspect because there's such litigation attached to this industry.
That's correct. Yeah.
Yeah.
Because it protects you personally. So all your personal assets are protected. Why wouldn't you want to do that?
Of course, that makes a lot of sense, right?
And whatever's in the corporation, it's in the corporation. So it could be a couple of vehicles, some equipment there. Take out depreciation when you're looking at maybe a few $1,000s in assets there. Maybe some cash in the bank. That's it. That's all you got.
Let's talk about these expenses. Let's talk about everything that contractors can deduct. I don't know how familiar you are with the different trades, but everybody's got their own set of tools and their own set of vehicles. And I guess if we get into the bigger trades like the hardscapers, the bricklayers, the concrete guys, you start talking about machinery at that point.
Yep.
What can we deduct and what can't we? Like what's obviously, I know that they've changed recently the expenses regarding food and
Yes.
drinking and basically socializing, like sales meetings or something.
Okay, so those are what they call meals and entertainment. So they say, okay, you can write it off, but since you get some benefit out of it, we're going to cut you off at 50%.
So 50% of all your meals and entertainment.
That's right.
So you got a tradesperson, he
That's
goes
good
to
to
lunch
know.
and he has a conversation with his boss or they're talking some business. 50% of that Big Mac can go.
That's right.
All right, got
That's
it.
right. Yeah, exactly.
No
Yeah.
problem. I'm just trying
For
to.
sure.
Okay, so what
Yeah.
else?
Anything related to your business is tax deductible. Any expense.
A photocopy,
Photocopier, Staples, yeah. Office supplies, and your equipment. Your car is tax deductible there. Insurance, basically anything for the running of your business is tax deductible.
Okay, now this is something interesting because I have this argument with people all the time. I've chosen not to lease and go through switching cars. I like being able to do whatever I want with my vehicle and not have a penalty, paying back damages of any kind on the vehicle or buying it out at the end. When you're writing off a lease or purchasing a vehicle, is it the same write-off?
It's about the same, really. Okay, at the end of the day, it's about the same. The leasing, you're limited to, I believe it's $600 a month, including HST there. And with a purchase of a vehicle there, you're limited to $30,000 plus HST. So you can have like a $90,000 vehicle, but they cut you off at $30,000 plus HST.
A leasing vehicle, you can only write off $600 worth of the payment on
That's
the
right.
lease.
That's right, yeah.
The entirety of the lease program. And then with the new vehicle, if you purchase it, then you're capped out at $30,000.
Correct, yes.
So all these $80,000 F-150s out there with all the leather seats and all the bells and whistles,
yeah.
you can't write off that whole $80,000.
No, you cannot. No, you can't. It's such, they recognize this from the get-go. I'll probably few court cases too. They say, well, we're going to bring in some rules here just to bring it down to earth here. So it's $30,000 plus HST, so it's about $33,900.
I'd like to say something like right now. So I had a $120,000 truck when I first got it. I never paid $120. It was worth $120. I got it for like $55, something like that. Kept it for 10 years. And in that 10 years, it was completely paid off, but I still got to write off 100%, almost like I got to write off the repairs, the tires. It actually ended up being, I got more of a write-off than I would have if I had a lease. Do you agree with that?
I agree with that. Yes, because it's built into the lease payments there.
What about the machinery? The hardscapers, the bricklayers. What about that? That machinery is 100%. No, it's actually a tool of their business.
It is, and you can actually amortize that over the life of the business there.
Really? And then if I go in and I buy a drill, it's the same thing, 100%.
Yeah.
What else?
It is.
I'm trying to think of what
But
other.
you can also another thing you could do is write off depreciation, and have different rates of depreciation for different pieces of equipment. So some equipment is 15%, computer equipment is like 30% because it depreciates much faster.
What about my Snickers workwear? My workwear that I've got to wear. It's a uniform, I guess, is my.
I think you can only write that off in television.
Because you're being, can you? No, can you? Like honestly, can you write off your workwear? The problem is that the Snickers are very expensive pants. You're talking about $200 for a pair of pants. Are they going to be fine if I submit that bill into my expense as workwear for my trade?
Clothes are not tax deductible.
Any of it?
That's right. Yeah.
Only in television.
Well, in television, I also know through television you can write off your haircuts, your facials, your manicures, your
Wow.
pedicures. Yeah, you can.
I didn't know that.
Oh, yeah. Like I knew that from actors when I was speaking to actors back in the film days that they have to look a certain way.
Yes,
their
yes.
body, their face, their
Yes.
attire, everything. That's their product.
That's
Yeah.
right. Yes.
So when they get in front of the camera, so I guess if you got a contractor who gets in front of a camera, you say, I know this loophole.
Yeah, well, honestly, I'm going to
I
talk
do
about it
know
for a
this.
second.
Yeah, go ahead.
I was in television for 15 years. And while I was on TV, people couldn't believe that I was writing these things off. But I had to buy certain things to keep myself looking cleaner more often. I couldn't come to a TV show with like 50 blobs of mud on me and, tons of paint. They wanted me to look, people want to see a certain image. So you have to spend money on that. So they give you a loophole, plus you're helping the economy, right? So there's a loophole in television.
Let me ask you this, Matthew. So we're in a digital age now. We've got social media is really being strong on construction.
Yes.
And you found me through LinkedIn, right?
Yes,
So we
yes.
got talking like that. So I'm on a bunch of channels. Are we fair to say that TV loophole, if someone is an influencer on social media and they're purchasing their workwear, their uniform, or they're purchasing t-shirts, company t-shirts, that could all be used for writing off?
It's a good question, Manny.
That's quite, I don't know. About
I'm
that
just trying to
part.
think of that loophole.
But you know
because-
what? You're right. It's entertainment. You are using it
You're in
for
front of a
entertainment.
camera.
I don't see a reason why there shouldn't, but I guess that's another...
Yeah, well, I guess it would depend on your classification. If your profession is a classification that you are a movie actor or a TV news anchor, and if that was your classification, then yes, you could do that. But as a contractor, you can't do that.
You know what?
And that's why that I've actually registered two companies. So I've got a production company and I've got a construction company.
Yes.
So I've got the two entities. So what I end up doing is I take the workwear and whatever, all that other stuff, and I put it towards the production expenses, and
Yes.
then I take my construction, tools and everything, and I put it towards my construction experience, right?
Yes, yes.
So that's how I divide, because I know that if you start putting the two and mixing it back and forth, CRA is going to be all over you. And that's why I don't do it that way, right? So, but a lot of guys don't set up a production company, which I think in the digital age today, they should be considering doing that.
If they get to a
Certain
point, yeah.
A certain point, for sure. I want to so right now we're just halfway through here. So we want to do the building code.
Oh, wait a second. Building code talk.
So we just chose a building code out of the book, out of the OBC, and we want to talk about showers because sometimes guys are just money down the drain. That's where it's at, right? But so section 7.2.2.3 regarding subfloor shower receptors should conform to waterproofing, and that has to be the walls and the floors.
So what you're saying is if you have a shower fixture and it's
Shower drain. shower drain.
I was talking, but I see this a lot. I see a shower fixture on the inside of the washroom, and then on the opposite side of that wall, they have a plug. So if it's waterproofed, it's okay to have that plug on the other side.
Yes, you could do that.
As long as it's waterproofed.
That's fine. That's perfectly fine. The other thing is there's a subsection too where maximum shower heads, take a guess on maximum shower heads for one drain, 1 2-inch drain.
Wait, say that again?
Maximum shower heads you're allowed in a shower with one drain.
I would assume 2.
They say 6. I'm surprised
What?
they say 6. And I'm like, that doesn't make any sense.
Is that a commercial level?
No, this is residential, man.
Who has 6 shower? Oh, I guess you would power. That's right. You're
You
totally
would
right.
have it. You'd have
Yeah.
3 body sprays. You'd have a rain head. You'd
Yeah.
have a hand shower. You could get to 6, no problem. But I'm surprised by that.
That's great to know, man.
And then they're also saying the subsection 3 is that all floors must be sloped. I'll fight that one all the time because there's different ways of doing it, right? So you don't need to have, and they want 1/4 inch per foot, right? That's what they're
That's
saying.
inside the shower pan.
Correct.
Yes.
Correct. So that was building code.
Wait. Building code doc.
So back to Matthew and talking some numbers here. I want to figure out what else can we write off? Like what other things can we? So 50% on the food. You can't do your workwear. You're going to have to figure out if you're going to be an influencer to be in the camera and look in that possibility.
Yes.
But all your tools, all your machinery, all your carpenter's pencils, all your material,
Correct. That's correct. Yes.
all your
Yes.
stationary material.
That's
And-
right, yes.
and now, home office percentage or space, a part of your home, if you're using it as an office.
Yes, that's right. So what you do is you take a portion of your home. It could be it could be a den, it could be a bedroom there. Measure it, and that is the area for your home office there. That area divided by the total area of your house above ground is the percentage that you're allowed to write off.
What's the
Usually it's around
percentage?
25%, 30%.
That's
That's
good
a
to
big
know.
office.
But that's an
That's how big.
office. How about storage for tools and your vehicle? Could you
Yes.
write off your garage?
I can't see why not.
Well, because you're storing all your machinery there.
Yes, that's correct.
The
yes.
most important tools is your vehicle, getting
That's
the
right.
stuff back and forth.
Yes.
Yeah.
But if you take up too much, if the home office takes up a significant part of your house, then when you sell that house, the government wants a little bit of money for capital gains.
Ooh, jingle, jingle.
Oh, I didn't know that.
Yes, yes.
So as soon as you sell your house and you've been declaring your home office space for your business, they want
Wow.
capital gain on that.
if it's a significant part, if it's a significant portion.
When you're saying 25%, is 25% a significant portion? It sounds like it is.
It depends. It can be a significant portion there of the house there. So that would mean you have to pay back 25% back to the government there.
Can I ask you something then?
Shoot.
If
Yes.
I had a shipping container and I was renting out a spot, or I was going to a storage facility and storing my tools there so separate from the house, so
Yes.
that way it wouldn't affect me as a personal gain,
Yes.
would that be 100% write-off?
Oh, yeah, storage is definitely a 100% write-off, yes.
Wow.
Because you have to store it somewhere.
And
Yeah.
even the cost of the container.
That's right. Yep.
That's good to know. Because the city is going this way now. They're trying to do laneways with shipping containers, and they potentially could be businesses in alleys, right?
What are some of the things that you've had clients, Matthew, ask you to write off that you've just kind of laughed at?
I had a client try to write off a exotic dancer that had come
Yeah, I like this
for,
guy
for
already.
an employee.
Or was it a woman?
Summer was her name, I believe.
Yeah. Oh, I meant, was the client a woman?
Unfortunately not. No.
What was her justification for that? I don't understand how would you write that off? How would you consider to write that? There was a business meeting there?
It could have been a business meeting at a strip joint somewhere.
I love it.
I'm sure there are meetings
talk
there.
Business. You could talk really business there, but the dancer herself she's not tax deductible. That would be a personal expense.
A personal expense. Oh, I love it.
You bring up mileage. Now, can we benefit from our mileage on these vehicles? Should we keep a log going? Because I know that a lot of people that work for other people and they drive their own personal vehicles, they got to be compensated for wear and tear on their vehicle and mileage, right?
Yes. Yes.
So how does that work? How should you set that up?
Well, basically, it's very simple. Just take a sheet of paper, even an Excel spreadsheet. Start off with the date. You started your beginning kilometers, a odometer, the ending odometer reading, number of kilometers, and also where you went. And that way, in case of audit, you could show to the government there, I went to Nathan Phillips Square here for business, and it was 50 kilometers both ways. each way.
And so guys should just get used to doing this log.
I want to say I do a log because I have a CVOR on both my vehicles, and I write kilometers and mileage and the fuel I use. Typically, when I sub from someone and I'm using my own vehicle, I charge 43 cents a kilometer for wear and tear on my vehicle. That's something I put in my stipulation. If I'm subbing from someone, like, say I'm going to work for Manny for 6 months and I know that, and I'm going to use my vehicle, I'm going to say in my contract, 43 cents. But getting back to that, I had a big problem with my mileage and my gas, and I never won. Even though I had all the data, all the information, all the facts.
Yes,
and
yes.
I still never won against the government.
Wow.
Yeah.
Interesting.
So I'm just saying, for the people that are listening, it's a very ginger area.
It can be, but
Yeah.
when you take them, you can actually say, okay, well, that's fine. I'll see you in federal tax court there, and they might say, well, wait a second here, wait. Well, it may not be worth our time to, go to federal tax court over this. They might come with a better agreement there.
I tried.
Oh, did you?
Oh yeah, they screwed me.
Oh, did they?
Yeah, I got a penalty of $10,000. Had to pay the exact amount they wanted, and I never got to write off that HST part.
You should have maybe went with Marianne instead of Ginger.
Well, I changed my accountants. That's another thing, is that if you feel like something's not working for you, it's honestly time to just pack up and go somewhere else, because that's what happened to me. I really enjoyed the person. I thought they were a great accountant, but I found out that in the long run, sometimes it's good to move on if you don't feel comfortable and you have your gut instinct.
I always say, go with your gut. That's the most important thing.
Yeah.
If the relationship's not working, just say, it's not working, pay them for whatever work they've done so far, and then call it a day.
Golf games, they write off.
Yes, they are.
100%?
50%.
50%.
Meals
yeah.
and entertainment.
Yeah.
How about if I take you target shooting at a gun range?
50%?
50%. Yeah.
Yes.
You have the benefit.
Really, huh?
Wow, that's
If I go,
fantastic.
what the hell am I going to go? So anywhere as long as you discuss business.
That's correct, yes.
So
Just take the receipt, make a note of the receipt that this was discussed, and this
just
is
a
who I
couple
was.
points, who was there, and just a couple points, and that's all they're looking for.
In the event that you get audited, so then you could present this receipt going, yes, this is part of that amount of meals. Is there a cap on the amount of meals? Like, can I spend $30,000 in 1 year on meals and entertainment?
You can if you want, yeah.
There's
sure.
no cap on it.
No cap, nope.
Okay, so I have something interesting. It's going to be a little wacky. Manny didn't know I was doing my private pilot's license, and so what we do is we have this cheeseburger run. So a lot of guys will jump in the airplane with, one or two guys, typically two, and we'll fly to Buffalo, and you'll have this gourmet cheeseburger in Buffalo at the airport and then fly back. Could I write that off?
Well, if you can prove it was a business expense, sure.
Wicked.
You had a business conversation on the plane, and while you got to the burger place, you had it there as well.
Exactly, yeah. If you could somehow prove that this was a regular part of your business there, then that's okay.
And when you say prove, does that mean that I should have a journal just for my business to say what dates I took what I did?
For
Is
sure.
that part of the ammunition I need in court?
Everything helps. The more notes you have, the better off you are
Okay,
to
so-
defend yourself.
Just keep a journal of all your actions of what's going on in your business, right?
So you can't just talk about it a year later and say, no, I did that. That's not going. You're not going to win that way.
No, be as detailed as you can. The fresher you do it, the better off you are.
I have a question about, one of the things we talk about guys that work for themselves, guys that work under someone else, and then guys that are in unions. Guys that work in unions have benefits and full pension plans. What can we look forward to being in business for ourselves to write off a pension or get a pension? And how do we write off benefits like dental and eyes and so on?
Okay, dental and eyes is a medical expense. So if you're self-employed, you can certainly write that off as well. If you have a plan, then whatever the plan covers, generally they cover about 80%. And the rest is up to you, the payor, to come up to pay the rest of it, usually about 20%. Okay. So that 20% would go on your tax return there, that as a medical expense there.
What are we looking forward to being in business for ourselves as a pension? I know that with a union you can do a pension, but I understand as being self-employed, you can't get a pension.
You can get a pension if you contribute to the Canada pension, which is not much.
And Canadian pension would be CPP?
Yes.
That's correct, yes.
But you can only max that out a certain percentage.
That's right, yeah.
And that's based on your income?
That's right, yeah.
So going back to Manny's point earlier on is if you do cash jobs, you won't be able to max that out so that in the long run you can cash out.
That's right, yeah. Canada pension, you're limited, I think, don't pay a whole lot a year. I think it's just under It's about $9,500 a year, Canada pension. So it's not really a whole lot that we're talking
It's
here.
not much of
Yeah.
a pension.
I
by
know,
the
but
time
better
you
than
need
nothing,
it.
right? Especially when you're
True.
in business for yourself.
True.
Because when we're young, we don't see these things and we don't worry about these things, and we always think we're going to be successful. But do we end up being successful? Do we save money? Do we, invest our money properly?
Well, it certainly would help to have an RSP or something like that to put money aside for like a pension fund of some sort.
Tax season and deadlines are when?
They just announced that they're extending the deadline because of this
What's going on
situation
in
we're
the
having
world?
here. June 1st, everyone has to June 1st to file.
Okay. Is it better to incorporate, when you incorporate, set up as a fiscal calendar year or just choose your own year? It doesn't matter.
It doesn't really matter. Some people prefer the calendar year. Some people prefer June. It just depends.
It just, I've got the calendar year. It just makes it easy. The end of the year, the end of the year.
One of my friends, he's very good with money. And one of the things he does is instead of paying the minimum requirement for his HST, what you're supposed to do is you're supposed to keep your HST. You're supposed to put it in your bank account and not touch it.
Yeah.
A lot of people,
Supposed to.
a lot of people juggle that money. I'm one of those guys. I will juggle that money, and I'm hoping I'm going to get it from the next job to cover it and put it back in the bank. One of my friends, he doesn't touch it at all, and what he does is he pays extra into it, and he gets a better tax write-off at the end of the year. Is that a fact, or is he just blowing smoke up my ass?
I
I've
don't
never
see a
heard of
real
that.
benefit to it, but I think if you put extra money into that fund there, what it does, it just covers you for any extras that you may not be aware of.
Okay.
So
So
all
that's
it
just
is.
kind
It's
of like a farce then.
Yeah, it's just topping up, just all it is. And some
Okay.
people do that. Some people top up just to be on the safe side. You'd rather have too much in there and have a little bit of a cushion. Okay, oh my God, the bill was, $5,000 more than what I had or what I thought. But luckily, I put some extra money aside to cover that.
How do you feel about RSPs?
It depends.
Very
everybody's
personal, I
situation
guess,
is different. They're nice for now till you reach 71. After age 71, you have to collapse that into what's called a retirement income fund. And that money comes back into income.
So you get taxed on it.
That's right, exactly. You don't get to decide. The government tells you how much to take out.
Wow.
After age 71, say, okay, now you had $100,000 in RSPs, and I want you to convert that to a RIF. And by the way, I only want you to take out about $1,500 per quarter.
I always tell everybody to invest into real estate. Is that a smart thing, especially with what's happening with the world right now?
Real estate can be a good play if you're smart about it. If it's a house or a rental property, yeah,
Triplex.
it's a smart move. Right now, I think we're entering, in my opinion, a bubble. Because right now, interest rates are really, really super cheap. And what happens if you're over leveraged and interest rates go up even a quarter percent? That could push a lot of people over the edge.
Wow.
It could be on like a lot of people could be on the bubble, and that extra quarter percent increase could push them over the edge.
I wanted to talk about what should the contractors out there, what should they be doing every single year regarding their financial, their income, their taxes, the HST. They should just be diligent about doing all this stuff, right? So what can you enlighten us a little bit on what these guys should be aware of as they're doing it, instead of just stacking up a pile of paper and then at the end of the year give it to you?
I have clients that come to me every year with a big pile of receipts there. I don't mind the first year. I'll let them get away with it. Okay, fine, new client, I'll take them on. But they say, for next year, I want these receipts in envelopes. I want the expenses written on the envelopes. And I want a running tally at the end as well. So it's always better to do it more regularly, at least say once a month, to sit down, get your books together there to see whether you're making money or losing money. Because when they come to me at tax time, I can't do anything for them. Okay?
Because too much work.
Well, it's too much work, and I say, well, okay, that's fine, but I got so much work to do. I'll go through some of the receipts there, and whatever's left over is whatever's left over. If you owe, you owe. I can't help that.
You brought up a really good point. I mean, the idea is that so you're a bookkeeper and you're coming in on a monthly basis, and I'm giving you all my receipts, and I'm actually categorizing all the receipts, saying here are all the expenses, meals, entertainment,
Yeah.
strippers, and then fuel and all this other stuff. You can actually start to tell me, are we being profitable or not? Where are we losing? What are we expending too much? We can start educating ourselves on that on our business.
That's correct, yes.
Yeah.
And the more you do it, the more often you do it, the better off you are.
The sooner.
Because you can keep it a close eye on things to say, oh my goodness, I spent a lot of money on that one project there. Where'd it go wrong? Oh, that's right. I had to buy extra drywall and stuff like that. So for the next project, I might have to bid a little bit higher to take into account that extra drywall I
Well,
had for the next
factor it in.
project. Yeah.
I mean, right now, everybody that's paying for regular gas is loving the 1990s price that we've got going on right now.
Loving it.
Right?
Oh,
Loving
yeah,
it.
yeah.
But everybody
Loving
who drives a diesel vehicle, we're being really, like, it's harsh. Diesel is almost 30 cents higher than
You know
regular.
what? You're right. When I first bought diesel, it was because it was cheaper than everything else. And then they just jacked it up. Which
Every
made no
year, I've
sense.
always paid attention to, on a month by month, I pay attention to how much that fuel cost is. And you're right. It should be factored into your quoting, your pricing, because,
right, yes.
and also figure out where is the job.
That's
because
right.
if you've got to commute an hour and a half for the day there and back, then you got to calculate how much. That's where the logging comes in. That's where the fuel comes in. You start factoring in on a job. It's going to cost me X amount for fuel on this job alone for me to go there for 5 days a week,
Yes.
or maybe on a Saturday sometimes. So that's already starting to add up. So I need to factor that into my estimate.
And the better question is it really worth taking on that project?
That's a very good question. That's very
Ooh,
true.
And we've talked about that. Sometimes it's easier to walk away from a job that doesn't pay and get not paid at all and stay home
Yes.
than go work for free. Your expectations of your customers, obviously you sit down with them and you tell them, this is how I want you to come to me once a month. What if I'm like Manny and I have my Taco Bell bag and it's full of receipts and I just drop and there's cheese nachos all over it and burger meat?
You're not going to like that.
Are you charge extra for that?
Yes, I do. Yeah, because it takes extra time to go through it to sort them out there. That's because
So the idea is that instead of having all the receipts on your dash,
yes,
every single day, collect those receipts. I used to do that too. I used to have a series of envelopes,
Yes.
and I would just pump them into each category: fuel,
Yes.
meals,
Yeah.
whatever, material, all this other stuff, and per job. And then I would take all that, give it to the bookkeeper, and then here you go, and then start organizing it.
it's a lot better to do it that way because you know yourself where that receipt came from, which job it was for.
Yeah.
And you can say at the end of the day, yeah, I've made a lot of money off that job there, or I lost my shirt in that one job there.
Well, and another thing that is really important is that if you have your own personal business, this is the most important thing in your life. It's making you money. It's making you survive. It's making your world go round. If you need a receipt that's a year ago and you don't organize yourself properly, you can't do a return. You don't know what you paid for that job, or like you said, you lost out. Can you write off rentals?
Of course. Machinery?
Is it 100%?
Yes, it is. Yes. Yeah.
Instead of buying a tool, I could actually go rent a tool, not have the overhead,
That's
and
right,
then just
yeah.
charge my customer, and I'll have 100% write off.
That's right. Exactly. Again, it depends on the contractor. Is it, do I need this tool long term, or do I just need it just for one job? If it's just for one job, yeah, go ahead, rent it.
and then expense it.
That's right. But you can still deduct it for sure. It's costing you money you need that tool to complete the job there. Without it, you can't complete the job. If
right.
you need to, rent a drill for a day to get something to go in there, then you have to rent it. But it's a business expense for sure.
Me and Manny have this theory that there is no set price in construction. It's always different for every client and every contractor. We use different tools, different materials. So there cannot be a set price when you have oranges and bananas. They don't make sense. What is a going price for an accountant to do bookkeeping for a contractor?
Well, that depends on whether they want me quarterly or monthly.
What's the difference?
A quarterly means they're not that busy. They just need me to come in quarterly. They just give me the receipts every quarter. Just give me all the receipts there, and within a couple hours, it's all done. Because they're pretty small people there. So that would be about $500 per quarter there. And that means I just come in there, I just take one afternoon and just crash everything. I do your taxes, I'll do your HST return there, get you up to date, and that's what I do. But monthly, that'll be about, depending on how busy you are, approximately $800 a month. And with that,
Wow.
I would do your payroll. I would also help you with your HST, produce a profit and loss, do a balance sheet. Also trying to get those numbers down to where you think they should be, as from a tax point of view.
Now I'm glad that you're throwing those kind of numbers at us. What's really important to know is that if you have a really small business, these numbers don't apply to that if you're a smaller business, or do they? It fluctuates
It
a bit how big
fluctuates.
your business
That's
is,
right,
if
yeah.
you're a beginner business and so on.
Yeah.
I don't want to scare people
No,
off
no.
because they need you. We all need you. Like, it's
Thank
very
you, thank you,
important.
yeah.
Was that my bum?
That's 2 for Carlito in 2020.
My
His phone went off.
My phone rang.
But here's the thing, though. When you get to the bigger projects, okay, you have to show them something. You have to show them some sort of financials for the last 2 years. You have to show them some sort of insurance. You have to show them everything. Keep you organized. Keep your WSIB up to date. Because if you don't have that, then you can't bid on those government contracts. But the nice thing about government contracts is governments pay. At the end of the day, they pay.
They may take 90 or 120, but they'll pay.
That's right, they do. But at the end of the day, they do pay. But it's a lot of requirements. It's a lot of work to jump through hoops there, but eventually they pay.
Well, I think the most important part that we're trying to say here is keep up with your taxes. Don't let it go into 2 or 3 years. It's going to be nothing but a headache and hell. You want to do this right away.
I don't know anybody who doesn't.
But Manny, some
I've
people
done my
get
taxes every single year.
Listen, I've been in business 30 years.
I hate it.
And I will tell you, there's been few years where I had partners. They didn't want to claim at the same time I did, and we just said, we'll do it tomorrow, 2 years, 3 years, and all of a sudden, CRA's like, hey, we want our money. And there's a penalization now because you took so long not to pay your bills. I don't care if it's right or wrong. You're still going to pay a little bit extra now.
Matthew, do you have some insight on everybody that's in construction that we know that goes on their own? They set up their business. They incorporate their brand. They're a one-man shop, two-man shop. They have a small, maybe group of employees. They pump a lot of investment into the business, but they try to keep their own personal taxes down. They do that for a reason, right? Because they want to just try to save as much money as possible from the CRA.
Yes.
But then when it comes to them wanting to purchase a house or do something else on a personal level, they're being penalized because they don't have the credibility because they've pumped everything into the business. Is there a way that these guys can balance themselves from operating a business but still keeping their personal looking good without paying a lot of personal income tax?
Some lenders will look at the income of the business there that you're doing and they say, okay, well, this person, the business is making $200,000 a year, and they take a small salary of about $15,000, let's say, just to pay all the income taxes, payroll taxes, and whatever else they're running for the house there. And they'll take a look at that and look at all angles. That's when you need a good mortgage broker to help you out with that aspect there.
Okay. All right. So there is a way of doing it. You just got to kind of find a balance.
There is a balance there, and I would certainly talk to a mortgage broker. They know more about it than I do.
Of course.
A mortgage broker.
Yeah.
That's interesting.
Well, they're going to look at the lenders. They're going to look at what's going on out there, and then because that's the biggest problem that a lot of these kids are. They're 25 or whatever, and they get into the business and they pump everything in their business. But then when it comes to their personal taxes, no, I only made $6,000 this year, right? So the bare minimum or something, and then they only pay the bare minimum in taxes. But then when they want to go buy a house, they're having a problem.
That's right. Like, well, you only made $6,000, so we don't see how you can afford that.
How can you afford a house, right?
Exactly.
How can you carry a $2,000 mortgage if you're only making $6,000 a year?
Exactly.
But you're actually making more than that.
That's right. Yeah.
Got it.
What about freezing bank accounts? I know a lot of people, the bank accounts have been frozen. Why does this happen, and how do you get out of it?
The taxman will freeze your bank account after a number of years. You haven't filed anything. You haven't paid them anything. And they say, well, this person, I had a client one time, he hasn't filed since 2012, since you incorporated. Shut down one of his bank accounts. So no problem. He goes to bank number 2, opens a bank account there. Then a year later, shuts down bank account number 2. Goes to another one. So eventually, they caught his last bank account. It was a small credit union. He had no choice but to sort of negotiate with them. He had to pay them a significant amount of money to sort of release that, and he had to agree that he would file some filings every quarter with the CRA. Otherwise, that hold would go back on his bank account there. And to keep them off your case there, keep your filings up to date. That's all I can say. Keep your filings up to date.
What was the client's name? Wesley Snipes or what? What's going on here? Why doesn't he want to pay taxes? I don't understand. He's going
Darth Vader.
He's like since 2012, and he's just going from bank to bank to bank to bank, and then and then the government's just following him as he's opening up banks.
Pretty much, yeah, exactly, yeah.
Wow, he just did not want to pay, huh?
He did not want to pay. No,
trust me. I had a year one time, and this was hard. I had a year one time. It was actually a good year. I had to actually pay over $25,000 in HST. Like I had to pay.
That's it,
dude. That was a lot.
You're writing off a lot of nice stuff,
wow, man. That check hurt, man. To write that check, but I had to pay it.
Yes,
right. You have to pay this. That's how it works, right? So,
unfortunately, yes.
When do you see red flags, and when do you feel that you need to assist or tell your customer when they need to go bankrupt or do a proposal? I know you don't do those, but when do you see in their paperwork that you need to do that?
Well, it depends on their cash flow situation there. If they're running into a significant cash flow situation, I would suggest that they make a consumer proposal or maybe seek a bankruptcy trustee and come to some sort of agreement with your creditors, or maybe call them up and say, look, I'm a little bit behind this month. Can I pay you maybe just 10% of the bill there? And they're pretty good with that. As long as you communicate with them, they're pretty good with that.
Yeah, no, the only reason I brought that up is because a lot of times they think accountants can take care of everything, and they can't.
No.
And a lot of times when you're not paying your bills, and maybe you meant the best and you really wanted to catch up and you've been juggling, these are the situations you get in. You still shouldn't be afraid to do a proposal or bankruptcy.
Take in mind, these bankruptcy trustees work for your creditors, okay? So maybe before you do that, maybe say, okay, what is the worst case scenario that can happen to me if I don't do this? Or what kind of deal can I sort of arrange with the trustee there to sort of make this life more pleasant?
Do you think in this current climate that's going on right now with the whole corona, we didn't really want to get into talking about that, but I'm already hearing some friends who are not in construction, have small businesses, and they're just saying that if this continues much longer, they're going to have to fold up shop and declare bankruptcy, right? So do you see a lot of that happening in construction? Because that's our big dilemma now. Everybody's afraid to stop working. They don't want to stop working because they need the money. The moment that the government pulls the trigger and says, listen, it's a lockdown, man. You're going to have to go home and not make money and just isolate yourself. Hopefully not quarantine yourself, but isolate yourself. I can see a lot of guys bankrupt and like they have small businesses that they incorporated.
Yeah, that's right. Yeah,
and they can't carry it now. And whatever reserve that they had is going to maybe cover them for the next month or so. I mean, I was talking to another builder today and he's like, listen, we're good for the next 2 months. Right. If nothing happens and we're not working, we're okay for the next 2 months. But then I'm hearing other guys, they're getting lines of credit, just prepare for it just in case. So you do see a lot of these guys possibly going down that road.
I could probably see a lot of them. Yeah, probably, particularly this year. Yes.
It's really crazy what's happening. Like my next door neighbor has, a $4 or $5 million house. It's, I've always looked up to him. I see him a very successful guy, family, cottage. And I assume he's doing really well. The other day I was, fixing something on my truck in the front driveway, and I said, hey, how's it going? You look great. And he's like almost in tears, and he's like, this 1 week has just closed my business down. I'm like, man, I thought you were like doing really well, man. Like,
Ouch.
you got all your it looks like you're doing really great in life.
Yeah.
And he's like, no, man, 1 week in a restaurant business can shut me right down. I went to a place to eat today and they had to close off a certain part of their store. And the owner knows me. I've been going to him for like, almost 30 years. And he was like basically telling me that he's going to be shutting down. Like another week of this. And these are successful people, businesses for 40 years, mom and pop restaurants that were very big, not small. And you would think that they're doing so well, but their overhead's so high. And you're right, it's a scary time.
So that takes us to, it's Green Book time.
Wait a second. It's Green Book time.
Okay.
So Carlito, what are we going to talk about at the Green Book time?
So today we've chosen contractor failing to establish written emergency procedures. That means every company owner having any employees or any subcontractors on his site, he has to have a tailboard meeting in the morning. It has to show where the hospitals are at, the emergency techniques, like where's the fire extinguisher, where's the eye wash, and so on. If you don't have that written down in a procedure and you don't have the guys sign off on that, so it's under section 17-1. And that's a $550 fine the first time you're fined.
Wow.
So if you don't do any of those things on a job site, on a construction site.
So you have to have a piece of paper. If you come on my site, even if you're the homeowner, I have to get you to sign and I have to explain to you. But what I do is I tell the guys where the water shutoff is. I show the guys where the emergency panel is, or just the panel, the fuse panel. So that way people know where to shut it off. Those are all part of the emergency. That was Green Book talk.
We've been doing this podcast far too long.
I was trying to do Schmigor, but it doesn't come out very well.
What else do you want to talk about, Matthew? What else have we not brought up yet?
Payroll. Payroll is very important there. You have to remit your remittances every month. And the government gets a little annoyed when you don't remit your payroll taxes, like your CPP, your employment insurance, especially your income tax. They get really annoyed when you don't submit that. And they get on your case if you don't submit them on time.
So you're supposed to do it every month?
That's correct, yeah.
I got a question. Where does
Yes.
that money go? I mean, I know where CPP goes, but I mean, they reinvest that and then they triple it and then they give us a couple pennies back on it.
That's right, yeah.
But where does all the rest of that money go?
I believe goes into general revenues.
And what do we do with that?
Whatever they want. So take your finger and just white it up, and whichever way the wind blows. Whoever donated the most to your campaign there, that's funnel some money back to
that's
them. You know,
pretty much where it goes. I agree, man.
Yeah.
Do you think it's easy to do your own accounting? Or do you
think they should?
recommend your professional opinion to always get a licensed and insured?
Well, I would say
accountant?
get a certainly a bookkeeper, because it'd help you keep track of all your expenses there. If you have the time, yeah, go ahead, do it yourself there. It's not that hard, but it's time consuming. If you have the time to sit down every week for at least a couple hours to grind out your receipts, hey, go ahead. But hire a professional bookkeeper, because that's what they do. That's all they do, and they have the time. They enjoy doing it. I'm sure these contractors have more important things to do than do their books every week there, but it has to be done. You want a line of credit or a loan, then you have to produce financials. And also, why wouldn't you want to know how much is in your bank account at the end of the day? Why wouldn't you want to know?
I wouldn't recommend that any contractor do their own taxes. I would hire somebody.
Oh, I'm not saying that, but I just want to have the conversation anyways.
I just think it's the same way that we justify that they should hire us instead of them do it as a DIY project. You hire a professional to do it. That's just my opinion. I'm not a tax person. I'm not a bookkeeper. I'm not an accountant. I don't want to be. That's not my love, right? So I know you guys love paper.
Yes, we do.
I do not like paper, right? So I hire somebody to do that.
So let's pretend that you're not an accountant.
Okay.
From a customer's point of view, what are the red flags for a bad accountant? What are some of the things that you've seen or heard from? Listen, I've had bad accountants, and then I've found a good accountant. They hear all my stories. What are some of the stories about bad accountants and red flags to look for?
Don't return phone calls. They want to do perhaps like an HST return for you because you're too busy, or something gets overlooked. Just stuff like that. If it's not a good fit, just walk. Just pay them for the time. What have they done so far? Find out what the bill is. Okay, pay them. Get your receipts back, get all your stuff back, and go somewhere else.
What are people charging these days to do incorporation taxes and then personal taxes? What are they charging these days?
Incorporation starts at about $800. Personal, for just a simple T4, starts at about $70 and up.
$70. What's H&R Block doing? I don't know what they're charging.
They're charging 110.
110 for personal?
Yeah, 90 to 110 with taxes in.
Personal.
Yeah.
What are they doing for corporate?
That is, it's always different. Like whenever I've spoken to accountants or them, they will accept, but it's always at different levels of the business. How much paperwork's coming in, how much paper how much they're late. Like, if do you have
Yes.
people working for you?
I do not, no.
Okay, so some guys do, and they have to put their guys on that, and that's
Yes.
hourly rates to
That's
go
right,
through
yes.
receipts. Like I said,
Yeah.
Taco Bell over here has cheese all over his receipts.
If either one of us has cheese on their receipts, it's going to be you, not me, man. Cheese. I don't have cheese on my.
I thought it was funny.
I haven't dirtied a receipt in years, man. And mind you, in the beginning, yeah, I had a lot of dirty receipts because I would just throw it in a bag.
Well, I'll tell you a horrible story that happened to me. One time, I was running to the ministry to get a new sticker for my license plate.
Why didn't you drive?
Why did I drive there?
No, why didn't you drive? You were running.
That's right. So I was driving fast to the ministry to go to see my accountant, and on the way, I figured, you know what? I'm going to do 2 in 1. I'm going to go into the ministry, get my new sticker, and I'm going to go to my accountant. Someone broke into my truck and stole $60,000 worth of receipts.
Wow.
And
Why did you have $60,000?
Because I was going to the accountant.
Oh.
And who wants to carry their box? Like, I put it in a box. My accountant always loved it in a box. I would go to, Staples or something, and I'd get a box, and then
Banker's
I'd put all my
box.
receipts in there. And we had a different kind of arrangement. I was the kind of the garbage bag kind of guy. I'd say, here's my Christmas bag, and take care of it, buddy.
Yeah.
But he charged me for it.
Yes.
He charged me for it. But it was easier on me, and I didn't have to worry about it, right? So someone stole all my paperwork. I checked garbage bins. I went hunting everywhere, and I never found them, and I had to pay top dollar on that.
Wow.
Yeah, horrible nightmare.
sucks, man.
Guys, what I'm leading to is don't leave your receipts in your truck.
Go to Taco Bell after you drop it off.
Triple G's, baby.
Is there anything else, Matthew, that we want to talk about?
Keep up to date with your filings there, and just keep track of all your expenses there. And that's all there is.
You know what? I'd like to ask, do you have any file folders or anything that you want your customers to give you? Like I said, I'm making jokes about garbage bags, but these are facts.
Yes, right.
You know,
Yeah,
guys come in
yeah.
with Burger King bags full of receipts.
Yes, yes.
Another guy will come in like myself with a box full.
Guys actually do that. That's what's funny.
I'm not joking. What do you like? How do you like to see it? Like, what is the perfect customer that you have?
Oh, the perfect customer has all the receipts all added up on the front of the envelopes there. So when I take a look at for the taxes there, I can say the Meals Entertainment is $3,000. Okay, check, got that. And then I got the rest of the expenses all nicely written out there. And it just takes me no time at all to do the taxes there. And I don't mind, cutting a little bit of a break for the client there because it doesn't take me quite as long.
If you could change one thing about contractors that you have as clients, what would you change about them?
I would say just keep yourself organized. That's all there is.
That's 2 in 1.
No, that's trees.
No, I meant 2 on this podcast. That's twice your phone went off,
Sorry.
man. You need to silent that. I 100% agree with you, Matthew. It's just guys, everybody's great on building. They're
Yes.
very bad on building a business. They just do not know how to stay organized and keep organized. And it's a rhythm. It's like working out, man. The thing is that you have to do it. I tell people, I used to do it month by month. I hated it because I would spend an entire weekend. I hated that weekend at the end of the month to actually organize all my receipts. Then I switched it over to doing it once a week. That made it a lot easier. Then I switched it over to you do it. I just leave it with you and you take care of it then
Yeah,
at that
that's right,
point,
yeah.
right? So
My accountant always tells me to, he'll look over my papers, and as he gets to know me over a few years, he starts to kind of tell me to invest in and do things with my money. What's a typical thing you always offer a client to want to do that's a smart thing for their future?
Put money aside for retirement there.
That's
and what
paramount.
percentage is that?
It could be any percentage, whatever you can live with. Whether it's $50 a month or $100 a month that you can live with, or live without. And just take it, whatever you get, and just throw it into a separate bank account or give it to your financial advisor to invest in whatever it is that they want to invest in for you there.
that's interesting you say it that way because I would actually, I would say whatever you can live without now, so
That's
then
right.
you can live with later.
How much does it help you to, I wouldn't say invest, but if you wanted to give it to a charity, how much does that help you in your taxes?
It helps a little bit there. It depends if you're a first-time donor, then you get the super donor credit for donating to the charity there.
And what is that, a certain percentage of your income, or how does that work?
Over $200, you get the super donor credit there. And I'm not sure how much that is this year there, but you get a special amount if you're a first-time donor incentive for donating.
That's fantastic.
Thank you very much, Matthew. We really appreciate you coming in and speaking to us and enlightening us on cash, income tax, HST, incorporation, sole proprietorship, all that stuff, because this is all stuff that all these young guys, and we went through it,
Yes.
30
are
years.
still going through it.
Yeah.
We have to go through it. So this is, so basically what we're saying is start as illegitimate as you want, then become as legal as you want eventually down the road.
And I can tell that hurts Manny. Manny hates cash jobs.
because I've never done a cash job.
Well,
Ever.
listen, cash jobs hurt contractors that work really hard.
Yeah, so-
It's harder to sell a project to a homeowner with 13% WSIB, 13% HST with insurance and overhead.
I need
than
that
it is,
HST to
hey, I'll
come
give you a
in."
$12,000 cash job.
No. Okay, perfect. Thank you very much, Matthew. We
you,
got
guys.
to get out of here.
Oh yeah.
All right. Thanks very much, Matthew. We really appreciate it. Sharing this information with our listeners.
Thank you, gentlemen.
And tune into the next podcast when we have it.
That's a 416, baby. Yeah, construction life. TO, baby.